It's January 7th. JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but I will say this is quite a good video for today because, man, being a holder of MSTR, being the founder of strategy like Michael Saylor is, it's got to be like riding an absolute rocket ship. I mean, you have your ups, your downs, you've got things going on. But man, we have more ups and downs so far in 2026, and we'll be getting into that shortly. So let's keep diving on in. Michael Saylor wants us to know that yes, MSTR will remain in MSCI indexes. This is from a post from Strategy, who wrote, MSCI confirmed digital asset treasury companies will remain in the MSCI indexes for the February 2026 review, a strong outcome for neutral indexing and economic reality. Thank you to our investors in the Bitcoin community. So this is huge news. I mean, at the end of the day, it would not have been the end of the world had MSCI gone ahead and excluded strategy and other treasury companies from the indexes. It would not have been great by any stretch of the imaginations because that is passive flow. The strategy does love to utilize. But at the end of the day, I'm a firm believer in what Michael Saylor says is that the indexes need strategy. Strategy does not need the indexes. We'll welcome them and we'll utilize them and we'll leverage these indexes and these passive inflows that they result in. But strategy is so much more than just being part of an index. I mean, I remember that post that Michael had when this FUD first came out back in November. It was very strong, basically just saying that strategy is so much bigger than being in indexes. And it is, because it's going to become the biggest and most valuable company in the world. Regardless, this was some sentiment, some negative market sentiment. This was some FUD overhang that was happening on the stock. The stock traded up about 6% in the after hours when this news hit. So at the end of the day, it's just good to get this behind us. I mean, MSCI this time did the right thing. Let's hope they make it permanent in the future. But to me, it's a very good sign, and it's very positive news for strategy in the near term. Again, nothing slows us down in the long term, but it is very good news for the short term price action. So happy to see that. And let's keep on moving with Adam Livingston, who says, MSCI was a nothing burger all along. File this next to proof of reserves, quantum, imminent liquidation below 1 MNAV, etc. Shocker, I know. Ignore the haters. Buying more MSTR and Metaplanet, obviously. And then this is with Dylan Claire's posting that MSCI keeps digital treasury companies in global indexes. And this is really big for Metaplanet as well, because of course they're going to be very positively impacted by this. In a lot of ways, probably even more so positively than strategy, because their company Metaplanet is still, at its nascent stages. They're still in the growth stages. I mean, strategy is just massive. They're huge. They're crushing it. But a company like Metaplanet could really utilize these passive flows that these indexes do bring to the table. So at the end of the day, remember, there's always going to be FUD. There's always going to be people that are hating. There's always going to be people who just want you to think the end of the world is right around the corner. Proof of reserves, quantum, imminent liquidation below 1x MNAV. You have to understand what the signal is amongst all the noise. Okay. Michael Saylor says, Bitcoin lets you keep your property. That's something that I love to say is a great feeling, that I know that I have my property in cold storage and that nothing and nobody can touch that. And I am so happy to have that in my corner as we go into the very uncertain world that we're about to be embarking upon. And by the way, the future is always uncertain. The future was uncertain for people that lived in the 1800s, in 1946, in 1971, in 1982, in 1997. These are all uncertain times, as is this. We don't know what the future is going to bring, but I can tell you one thing. Bitcoin lets you keep your property. Adam says, MSTR could literally take this premium from one after-hours trading session and put away half a year of dividend payments for prefs and buy some more Bitcoin. The model Saylor has built is totally and undeniably structurally unassailable. The beatings will continue until morale improves. And then here's strategy in the after hours yesterday was up over 7% at one point. I think it's slid back down to about 6%. But, who knows? All I can say is Some more negative sentiment and negative FUD has been removed, so that is good. Dan says, I don't think enough people realize that buying MSTR at book here is a very asymmetric opportunity. I know everyone's feeling the pain of the summer. I am too. But if you are in fact bullish on Bitcoin, then there is a massive amount of upside when entering at book value. Here is the key at entering in a The key here is entering at book value, but most have become too fearful when they should be greedy. Let's get greedy. Let's go. And Bitcoin Therapist says $1,000 MSTR is closer than it appears. And I believe that is true as well. Brian says, new stablecoin backed by Stretch. I expect to see a heated competition for market share in this space over the next 6 to 12 months. And this, by the way, is a huge development for Stretch and, of course, for Strategy, where Travis, they launched Buck, which is the Bitcoin dollar. Basically, it's going to be backed by Stretch. It's going to be offering 7%. There's some more details here. I will let you dive into it if you want to. The stablecoin, excuse me, is called Buck. And again, it's going to be leveraging the 11% yield of Stretch. And it's going to be a powerful instrument. And this is what Michael Saylor foresaw. And this is what's going to just continue to keep us Stretch above 11%, above $100 in the future, so that Michael Saylor can just keep ATMing his flipping face off. Adam wants us to know that Stretch is committing a hate crime against quote unquote safe yield. $10,000 held for 20 years, reinvesting the yield. Look at Stretch. It'll bring you back $80,000. These other ones, $20,000 is probably the average. $25,000 is the average. And then this is a great chart of strategies, Stretch versus other fixed incomes. Look what happens over the years if you were to invest in Stretch versus these other ones. It just isn't even a fair race. Brian says, with MSCI index delisting FUD behind us, I expect Stretch to quickly regain par, nearly already there, and some ATM issuance to be reported on next Monday's 8K. We are starting 2026 firmly in game on territory. Let's go. Ragnar says Metaplan is up another 4% in Tokyo. It's now at 31% year to date when compared to the December 30 close of 405. The announcement that MSCI won't exclude Bitcoin treasury companies from their indexes is a rocket fuel for companies like Metaplanet. 2026 will be epic, and this has been a great run for Metaplanet these past couple weeks for sure. I absolutely love it. And then Ragnar says, the Metaplanet ATM will restart soon. Metaplanet now is at 531 yen. At 637, just 20% from here, their ATM will restart, allowing EVO to sell up to 105 million shares, which will raise at least 427 million from Metaplanet. At 777, they can sell another 105 million shares, allowing them to raise at least 520 million. And then at Bitcoin 120,000, this will allow Metaplanet to purchase 8,000 additional Bitcoin, not counting the purchases from selling preferred shares. Remember that Metaplanet's goal is to reach 100,000 Bitcoin at the end of the year. In my opinion, they will achieve that. 2026 will be an epic year for Metaplanet. And by the way, they have to 3x their bag. That's a 300% increase to get to 100,000 by the end of the year. And I think they can do it too. So great things happening right now. It's 2026 is a new year. So glad we put 2025 behind us. Clear skies ahead. There's going to be some bumpiness, though, at the same time. There will be pullbacks. There will be drawbacks. Like, think back to Michael Saylor riding that rocket. It's always going to be like riding a bucking bronco. That's what we signed up for. That's how this game is played. So sit back, relax, and enjoy Michael Saylor.
Mitigates the risk. And then, of course, not all preferred equity is equal. You could have a refinance or a put obligation embedded in the preferred equity would make it shorter duration. But if you make it perpetual preferred equity, then the capital is permanent. And if it's permanent, that means you're not going to have any credit default event, not in 5 years, not in 50 years. And those are all reasons why you might want to do that. But of course, the next thing to do is take it public. And so most credit, if you think about private credit, it's illiquid, it's unbranded, it's local, it's difficult to access. But public credit, liquid, it's STRC, it's Stretch, it's got a name, it's Stride, STRD, it's got a name, it's global, it's branded, you advertise it, friends tell their friends about it, people go tell their mothers, their fathers, their sisters, their workout partners, you should buy some of this. It's easy to access. There are 4 credit instruments you can buy on Robinhood. They're STRF, STRC, STRD, STRK. There are credit instruments. So this idea that you want to actually take it public is a big idea. Now, how do we learn that? Well, we learned it by watching our own convertible bonds not trade in the market. We had equity trading $4 billion a day, and we had convertible bonds not trading for 3 days. And it occurred to us that there's something not right about that market, and we wanted to fix it. And the way you fix it is you take the things public. And then the other point that I make is digital credit is better, because if you buy $100 million of digital credit, we can sell it to you in 30 seconds and we can create it. We create the backing collateral for the credit in real time. So if we get $1 billion of credit orders, we create the $1 billion of collateral and we stay synchronized. You can't create $1 billion worth of home mortgages overnight. You can't create $1 billion worth of commercial loans overnight. So you cannot create conventional credit and synchronize it in the same way that you can create digital credit. That's why, banks have, 50-story buildings and 27,000 employees. We can create billions of dollars of credit with 6 people. It can be $1 billion, it could be $10 billion, it could be $100 billion, it can be $1 trillion. Still the same 6 people. It's extremely efficient, instant, automated. And when you put all that together with the last observation, which is it's tax-deferred income, this is how you go from a 2 or 3% yield to a 20% yield, right? Those are the innovations that make digital credit.
Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest in it over time as you do any other retirement account. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get into. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. When you want more for your business, start with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Your business identity is more than your logo or website. It's everything that defines who you are and how you operate, from what your customers see to what they don't, like operating agreements, meeting minutes, and compliance paperwork. With Northwest, you'll get more for your business, more privacy, more guidance, and more free resources than you'll find anywhere else. For nearly 30 years, Northwest Registered Agent has helped entrepreneurs form, grow, and protect their businesses. They're the largest registered agent and LLC service in America, powered by over 1,500 corporate guides, real people who know the local laws. It can help you every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
And here, the fortunate happenstance is we just discovered the Bitcoin treasury model. The treasury model is just triple tax deferred. We raise billions of dollars of capital by issuing securities. That's tax deferred. We generate billions or tens of billions of dollars of income through appreciation of the asset, tax deferred. And then we can pay billions of dollars of dividends as return of capital, tax deferred. Rinse and repeat. I would say that we have inadvertently created the most scalable, tax-efficient fixed income generator in the world. The digital treasury model is the most tax-efficient generator of fixed income. If your goal is to generate large amounts of after-tax or tax-deferred fixed income and by the way, who would want that? Like everybody. If that's your goal, then this is the way to do it. There's no other company that's going to tell you they could generate $100 billion of dividends tax-deferred as rock dividends. They can't do it. If you look at the entire structure, return of capital dividends, they've been utilized, but normally by pipeline companies and real estate companies and oil and gas companies, and they're basically using depreciation credits in order to get to negative E&P. And you cannot, maybe you can pay 3% dividends, and maybe you can pay 3% against a very fixed amount of physical capital. But there's no way to pay 10% dividends and to grow the business 20, 30, 50% a year because the physical capital won't support it, the depreciation won't support it. So to do what we're doing at the scale we're doing and grow the way we're doing, it has to be digital. So what is it we are? We're basically a digital credit factory. The way to think of it is credit investors want US dollar yield, and then equity investors want BTC yield. So we're doing a perpetual swap. We're swapping. I'm going to give you 10% US dollar yield forever, and I'm going to take back the Bitcoin, which is an X% BTC yield forever. And since the equity investors want the Bitcoin per share, and then the credit investors want the yield, everybody gets what they want. And because we do it with preferred equity, we do it without credit risk. And so if you've studied the swaps market, you can see what's going on here. Now, we just started doing it in euros. So obviously half the world wants to use dollars, but there's a big market for euro yield. There's a big market for JPY yield. And so you can apply this pretty much in any currency. How important is it to pay rock dividends? Well, if I take $100 and I pay 10% dividends on $100 and your tax rate's 50%, you have $164 after a decade. But you can see that when that tax rate goes to 37%, you're 14% up. When they become qualified dividend distributions, you've got 35% more money. And if you got rock dividends, you've got 64% more money. So it's pretty substantial to any retail investor or small business. So what are the digital credit opportunities? Well, this is stretch yield versus other credit instruments. And what you see here is that even if you don't pay taxes, stretch is twice as good as most everything else. And if you're a taxpayer in Miami Beach, it would be 4 times better than your money market. And of course, if your bank's going to pay you 40 basis points, but I'm going to assume you're smart enough to move your capital into a money market and get paid 400 basis points. But ultimately, the best thing going is private credit, which is going to be that illiquid, opaque idea. And this is going to be much better than that. And this is, again, trading plus or minus a few cents right now. Now, to make this a little bit more personal, I've actually calculated the tax equivalent yield in New York City for you that live in New York City. It's 21.8%. So Stretch is a bank account that pays you nearly 22% tax equivalent yield if you're a New Yorker. It's about 21% in LA or San Francisco. If you live in Miami, it's 16%. But if you're saying, or you're asking, why would I want digital credit? I think the chart's illustrating why you're going to want digital credit. This is that story in Europe, right? Stream is a 12.2% effective yield. The money markets are 1.5%. A 10-year euro credit instrument is 2.6. So you're talking about 1,000 basis points more than the 10-year index in Europe. You could fund in euros, buy Stream, and capture a 10% carry trade, right? Who's going to do that? Well, I think a lot of people are going to do that once. Here, you have to come to 2 conclusions. You have to decide Bitcoin's not going to zero tomorrow forever. Do you trust Bitcoin? And then you have to trust the company strategy, right? So if you trust the issuer and you trust Bitcoin, then this is like free money, right? And it's staring at you if you want the carry trade of carry trades. This is the tax equivalent yield in the major cities in Europe. You know, 23% in Vienna, right? And I put the money market fund over there for reference, just so you see. The status quo is the little green dot on the right side, and this is what the digital economy is going to bring to Europe over time. The summary of all this, right? I mean, the message is digital credit's just superior. It's superior to corporate credit, conventional credit, mortgage-backed credit. The credit's a $300 trillion market. As people start to think, well, maybe I'd like to get double, triple, or quadruple, you're going to see 1, 2, 3, 4% of that market change. This is a snapshot of the risk-free rate in every currency in the world. And what you can see is the US dollar is the highest risk-free rate. But, you know, you float over here to Europe, you're 1.9, 1.8%. In Singapore, it's 1.4%. In Japan, you're 50 basis points. In Switzerland, you're minus 40 basis points or something like that.
What's the second best? There is no second best.